Welcome to StockOdds, Odds and End podcast. I'm Dave Singh here with Rob Friesen. Good evening, Rob. How's everything?
Good evening. How are you tonight?
Good, thanks. So
Good.
again, we're here trying to get our bearings and jump on the week ahead here and see what StockOdds has in store for us in terms of the odds and any ideas. So
let's just first say sorry about last Sunday. We did do a session, but the recording didn't work for some reason, so we didn't have anything to post. But Dave and I did have our meeting, and we talked about a potential rebound for oil and a potential rebound for the markets, and we seem to have gotten that for the week, and so. Some things, definitely played out as we discussed. Well, we're hoping to be helpful to you guys this week as well. We do have the end of the month and the beginning of the new month on Friday, so it's an interesting week, of course. And we'll hand it over to Dave here to. Well, actually, let me do the futures first, and then I'll hand it over to you for the groups and seasonality. Okay?
Sure.
So since the futures opened here tonight, we have the Dow futures are down 0.34%. The S&P futures are down 0.35. NASDAQ is down 0.42. And the Russell is down 0.48. So Russell is a bit ahead in terms of pulling back a little bit. Flipping it over to to the short-term chart here, as we were opening, we did initially pop up just slightly, and then it's been sliding down with lower highs over the last few hours. So not sure where it'll be when we open. The VIX is also notched up slightly. Getting into crude and stuff like that, we did pull back a little bit. Crude on the WTI is down 3.05%, and the Brent is down 2.84%. So it's a significant pullback, and it seems to be kind of connected more to what's happening in Shanghai and the lockdown and stuff like that, because there were some other refineries and other, and Russia's going after the, oil and food chain as well in Ukraine. So I don't know that this would be a sustainable pullback. We may again see another rally off of weakness in oil because we're still in play here. This thing is not over by any stretch of the imagination. So, but it is pulling back temporarily. So, okay, over to you.
Yeah. So we're approaching the last 3 days of the month. This past Friday was day one of that last 5 days, and there is something unique. So for the spider, when you look at the last 5 days of March, it's expected to have 1.26% performance. But when you look at the last 3 days, it's expected to have only 0.26. So it's majority of the gains are supposed to be in day 1 and 2 of the 5 days. So these last 3 days are still expected to be up, but not as much. Then the groups within that, the Russell is expected to outperform. So the IWM, 0.72 relative to 0.31 for the spider, right? So almost twice the performance out of the small caps. And things like technology, QQQ would expected to underperform. There is some unique symbols popping up in terms of travel, like the airlines are expected to vastly underperform the spider the last couple of days of March. So I looked at the JETS ETF, and that's an interesting one, minus 1.75 relative to the positive 0.31 for the spider. And financials are expected to outperform too. So there are some interesting sectors here. Discretionary is not so great, but I think utilities are much greater. So it's a little bit risk off, I think. And the interesting symbols for travel are CCL, expected to vastly outperform. NCLH, that's a really down one. And some of the airlines, American Airlines, United's not as good, but American Airlines or the Jets ETF are expected to be pretty good shorts, right? So there are some interesting stories there, and this, I mean, it's of the 5-day seasonality, the last 3 would have some robust signals, but there's still some there, yeah.
Okay, well, let's just address what could be skewing the data a little bit. So if we go back to 2020, in March, we had a significant meltdown in the market, kind of culminated in the March 23rd. Some of the groups did start to bounce back a little bit more faster than others. The airlines and cruise and so on. So airlines are under industrials and cruise lines and things. They did not bounce back as quickly. Like they took a longer runway to get kind of turning around. And I think that's because it was quite obvious at the impact in those groups. And remember, we had a few cruise ships that were locked out at sea basically, or couldn't find a harbor or to pull into, or I know there was quite a bit of disruption. So I would say that looking back at the data, 2017, 18, 19, they did have similarities in the last few days of March. The cruise lines did pull back anyway, but then in 2020, it was greatly enhanced because of the pandemic. So I think that skews the data to a little bit more negative than it might otherwise have been. But the seasonality is certainly there. I can agree with that, and I wouldn't be having a problem using those as shorts. But I would like to find, something that has an opportunity to outperform, right? So what are some strong groups that you see for the last 3 days?
Financials and utilities. Those are 2 solid ones.
Okay, let's stop with the financials for a minute. Okay, have you noticed we just had a massive, I think a historically significant move in bonds. The bond sell-off has been just huge, and that's continuing tonight as well.
Yeah, the 10 years at 2.5% right now. So
yeah, so look at the 2-year. It's the bonds are selling off, and the yields are rising, right?
Mm-hmm. So that's supportive for financials as well.
It is, yeah. We've seen this direct correlation. Anybody listening can certainly put this into any chart and go, just take a look at what's happened with the bonds, and use TLT as a proxy for that, and look at what's happened over the last 6 months, and then look at financials, and you can see that inverse relationship. Financials have been stronger when bonds are selling off. And so this rising interest rate thing is better for money-centered banks, insurance companies, and things like that. So you can use that in your trade. And so I wouldn't have a problem, going into this week with long financials and, short some discretionary names like Dave brought up with cruise ships, airlines, things like that. That seems to fit a long short model that would be seasonally conducive and probably would pay off quite well for the week. So anything else on your radar there?
No, not in terms of the almanac.
Okay. So let's talk about metals for a minute. And I noticed silver is performing pretty poorly. It's had a lower high, and it just really only had that spike at the beginning of the war and into March there. It spiked up pretty good and made new 6-month highs, and then it pulled back from that, and it's made a lower high, and it's weaker here tonight again. So it doesn't seem to be too sought after right now, hey?
But you've mentioned before too, that's more like tied to utility, right? Being if the economy is strong, it can be utilized, right? And if the economy is weak or we head to recession, right, it's kind of a consumable metal as opposed to gold, which is just thought of as a hedge against inflation or riskless assets.
Yeah, I mean, both gold and silver look like they're a bit softer now, as the war's still continuing. No signs of letting up, no signs of peace or a true ceasefire or anything like that going on. So, but gold is kind of on the back burner. Gold and silver both. But you're right. Silver is more the utility. Contrast that to crypto, which we're back up over 45,000 on Bitcoin US dollar. We're trading at we're up 4.92% right now, up $2,200, and it's at 46,943. So I think that that 45,000 area has been significant over the last 3 months, and this whole use case. I hear references to crypto being helpful for funding some of the Ukraine initiatives. There might be, people in many countries that are taking a look at it. I think if a central bank goes and buys some crypto, that will give it more validity. But the way it's looking now, it probably wants to make a run up to the 50,000. And if it can get over 50, there's a good shot that it could head back, to test the highs that we had in November. So it's interesting. There seems to be, it's not fading into the distance. It's coming back a little bit stronger here, and it's up for the year, whereas the market's still down for the year, right?
So it's showing a little bit of risk appetite, even for this week, if it's up.
Well, and that's important. Right, I'm glad you brought that up, because it is important, as there are many tech companies in the NASDAQ 100 that are very significantly related to blockchain and to Bitcoin specifically, right? Tesla obviously still has a holdings in Bitcoin. And so, I think Tesla was going to sort of slow down its or halt its manufacturing in Shanghai because of the lockdown. But so that could be a little bit of a drag on it. But Bitcoin, could give it a little bit of an upside move. I don't know if you noticed, but Tesla did get back over 1,000.
Yeah.
And and there's the StockOdds has it pretty positive over the next 5 days, up I think 2 to 2.5% or so move. But if it can get back up towards 1,200, let's say, they may do a split on it, do another 5-for-1 split like they did before, and then that would make it a candidate for inclusion into the Dow Jones. Right? Because you have to have a lower price in order to, be a candidate for the Dow 30, because it's a price weighted index, not a market cap weighted index, right? So you can't have a price of, coming into it at 1,000 or more, that's going to throw it off, right? So if they split at 5-for-1, that would be helpful. So this, I would tend to still be favoring in this bounce. If the market can kind of maintain a bit of traction, I think some of the tech stocks still have a room to come back. And then, some of your staples or basic materials, gold and stuff, may not perform as well as what the tech area could be. So, so it's really critical that you watch like the Qs, the NASDAQ 100, and see it, look for any signs of risk on. Bitcoin being one of it, some of the tech names being another one. Looking at the map of the market, how we ended up on Friday. Well, obviously energy was quite strong. We had that fire at one of the refineries, and that boosted it, in mid-morning sometime. We had Berkshire B's been really good. All the financials, insurance and things like that. We had healthcare was good. And what was softer on Friday was some of the semiconductors, software like CRM, Intune. Now those were all down a lot. Apple's been on a pretty good streak. Have you seen that? It's been on like 9-10 day streak or something, I think. It's quite amazing. So yeah, I mean, even Tesla streaked up for 8 days and then took a pause. And it was down a little bit on Friday, but Home Depot, Lowe's down. Now, normally home improvement in terms of seasonality tends to still be doing a little bit better this time of year. So we have to look and say, okay, how did Home Depot do prior? Like, did it already have its move sort of in December, January, February ahead of the spring season? But normally I find that it's still running fairly strong right into the beginning of April, and then it kind of tapers off, right? So as a lot of these groups tend to move ahead of their peak seasonality. That's, again, market factors in things that it knows or can anticipate. I can't get away from that. It's just something that I repeat all the time. The market tends to factor in everything that it knows or can anticipate. It's just not very good at factoring in shock and awe surprises, right? So, so energy, REITs, utilities, financials, healthcare, some tech, all had a pretty good day on Friday, and we're looking to see if the market, how it will be opening tomorrow morning. I'm just going to go back to the futures chart here a sec and take a look at the NASDAQ 100 specifically. So we did break out a little bit on Friday to a high that was higher than Thursday, and then pulled back a little bit. And now we're opening, well, if we open around here, we're opening just below Friday's close. And so I would definitely frame it by Friday's low. If we take that out, we're probably going to be cycling back down. And if we take out Friday's high, then good shot at going back to our February highs. So definitely focus on, then that applies to the S&P as well. February highs is the target for the S&P and for the Dow as well, NASDAQ. And Russell, well, it's stuck in a channel here. So February does have a high. We had a lower high here in March than February, but it doesn't have much to move to get to the top of that channel. And if it breaks out of that, then we could take a run back to 2200 or so. Remember, the best 6 months of the year for the Russell should be normally from November 1st until April 30th. And this particular time, we've seen it spike initially in November. Remember the good few days that we had that very first week in November in the Russell? pressing some of the small cap stuff. And then
the first day was huge. It was like the entire month's performance.
It was like 5% or something for the day, yeah. And then we've been down ever since that first week of November in the Russell, and it's been performing far worse than the other three horsemen there. Okay, so this week, depending on how it plays out, there could still be a turn of the month effect into Friday. If we close fairly weak on Thursday, it could still set itself up for the Friday. The only caveat to that is that Fridays, we've been seeing some mixed themes, but mostly we've been seeing some risk adjusting for the weekend, right? Because of what's going on geopolitically. So that would be the tension there. It might close lower on Thursday. It might open higher on Friday or bounce and have a nice rally. And then maybe in the last hour of Friday, we sell back down a little bit, taking a bit of risk off the table for the weekend. Until then, the last 3 or 4 days here, Monday, Tuesday, Wednesday, Thursday, if I was going to call it in terms of up potential, I would say that the first 3 days should have the best up potential. The last trading day of any month is always, tends to be some deleveraging. Funds do cut back a little bit to meet their net capital calculations, institutions, things like that. So like just allow for a little bit of pullback on Thursday. And again, if we get really nice discount by the end of the day, if you like to take stuff overnight over the turn of the month effect into the new month, that could be quite beneficial. So play it by ear. Anything else?
No, let's see how the week goes.
Okay. All right. So I'm going to focus on staying a little bit more away from oil if I can, just because I think it's going to be, highly volatile and a little bit unpredictable here with so many different forces on it. I'm going to, look at the financials as a long candidate because of the pressure on the bonds still. And I think the REITs could also be performing okay along with the financials. The only problem with that is, we have seen some housing pressure. Some of that pressure has showed up on Home Depot and Lowe's, I think, as I was talking about earlier. And, so that also might color the sentiment in the REITs, but normally they should be okay along with the financials with the bond move. But again, if there's the home pressure and, commercial pressure, we still may have that sell-off too. Consumer staples are probably okay either way. I mean, there's some good pickings in there. Discretionary, I think you have to be, a little bit careful on some of the discretionary names. I think you still have to be careful on valuations. It can swing where they just start pressing a little bit more the value proposition, and again, take some money off the table on this more speculative things. China, I think, is starting to roll over again. We had a pretty good bounce on the China stocks. And with the lockdowns, I think it's starting to roll back down. So just be careful there. And the VIX is notching up a little bit. So it's still staying elevated. And the thing with the VIX is when the VIX is high, you have to allow things to swing both ways. You don't get that nice, gentle drift all day long, that you can kind of sit back and count on. You got to be more quick to lock your profits, take the inflection points, allow the market to swing both ways. Okay, so as long as volatility is high, you know, just keep it tight. Okay. All right, I'll let you go.
Sounds good. Good luck.
Take care. All right.
Thanks.